Good afternoon, this is Dan Hussey from algodaytrader.com. It is 3:10 p.m. Central Standard Time, 4:10 p.m. on the East Coast. It is July 20th, 2012, and this is your daily market recap for the NYSE session, and I guess the week-ending recap as well for the major markets we've been following. To begin, the S&P 500, today was options expiration Friday. On options expiration Friday, we do not anticipate a gap fill. Anticipating gap fills is, we have very defined rules that are based on the back-tested probabilities of gap fills at certain levels and on certain days. Particularly Fridays are actually the highest percentage. Your typical Friday has a 82% chance of filling the gap, except for an options X. I think we need to step back to the daily to remember where we are in trend and where we are in trend until it fails. From the daily perspective, well, we have weekly targets of 1500. We've gone over that trade, or we've gone over why that is a number of times. Right now, sorry about this. Okay, from the heads up, guys. By the way, Aussie and Aussie Yen are actually kind of rallying here into the close. Good stuff. From the November lows to highs of 2012, November of 2011 to highs of 2012, the market pulled into a full 50% retracement at 1283s. We've bounced off that level and we've broken every short against us, and we continue to hold our series of measured move longs. The series began after breaking shorts. The market pulled into a full 50% retracement at the 1318 halves. There was a front run of 5 ticks at the 1318 halves in 1975s. Let me just double check that. Yes, it was a 1975 low. We front run to 5 ticks. It's an awfully big front run, but it is a major daily level. And the fact that we saw not 1 but 2 levels front run by that big of an amount is why we are considering it traded. The counter trend against that trade broke. The market pulled into a 50% pullback. Front ran its. Ooh, hold on, I'm missing one here. That day closed higher, so you can't actually see it. But we front ran the next by 5 ticks as well, and have run up into targets. We did begin extensions. However, the extensions we traded may not have actually been being pulled from the highs before the last entry to highs. And today we pulled into the next in the series halfway back long, and it's holding. If this level wasn't holding and getting a reaction today, we wouldn't be concerning ourselves with really trying to find longs right now, because putting in a double top at the July highs is not exactly the most bullish thing that can happen in this market. We came straight down off highs, and we're currently at a major point. There's a 1357 long against a 1361 short. The 61 short or 61 half short traded at 61 evens. I'm sorry, it has not traded. Oh no, it did. It did. Wow, this has just been a long day. It traded at 61 evens and has a downside target of 55.50. We have been stuck the entire afternoon inside these two levels, which is proving to me the bid here is exceedingly strong, but so is the offer. On options X not being able to break it, not that it worries me, but I actually was impressed to see the downside absolutely halted at this level on what is supposed to be one of the more volatile days all year. The market now, if it can break this short at the 62 halves, it's not very far away. The market actually will have a upside target at the 1384s, the 1400s, and then the 1500 for the big daily. We are in an election year, and I know we've seen plenty of people talking about how this looks like a repeat of last year. We came off lows in the summer, we rallied up into July and August, and then the market got slammed. The only difference is it's an election year, and we are actually holding a series of longs. We never traded longs before. We traded them on the 15 minutes, but we didn't trade a daily long last time. We just didn't hold the daily short. So, that being said, I see this as just a couple minor differences. One, we have every single degree of trend is in longs, with the exception of the micros right now. And you can make an argument that this 15-minute right here. Otherwise, everything else is up. And to me, this looks like a dip holding prior resistance now as support. And we have a bullish above, bearish below line in the sand in the short term at a 53.25. I don't want to rule out the ability for this market to actually pull into a full halfway back long, which resides down at the 1347s. But we're holding this level, and if we can break shorts against it, we will have a long that we can trade. The gap fill for next week, we're going to be looking for a yes, it's the 58.5. It looks like, yeah, 58.5 gap fill going into Monday. The pivot is a 60 quarter. So if we trade down to targets on the open, it is a buy looking for the gap fill. We'll probably honestly just open right where we left off next week, and hopefully continue straight up in the upside. The Aussie dollar, incredible. It is a mere few pips away from breaking, actually breaking along, or it's short. It's holding its next in the series long. Bring up an hourly chart for the Aussie dollar. Off of the NFP Friday lows, and this is very similar to the Aussie yen, which, by the way, is getting pretty bid here. It started a series of longs, traded once to target, twice to target, then traded an extension long, defended the 61.8 to target, same anchor new highs to target, and same anchor new high never traded. Do you see how the third time this extension traded off the NFP Friday highs to highs, we never traded down into it. The market held a traditional, defended the 61.8, went to target against it. That means the prior highs before that traditional to new highs gives an extension long. So we know we have a 103.35 support level. If for whatever reason we get stopped, I'm a buyer there. I'm a buyer there with a 40 pip stop. It's a rather large trade. Probably going to only have to do 2 units on it for the 2K account because it is a larger stop. But it's definitely a buy, and I probably won't look to get free on that trade, but we'll see. Moving down to the 5-minute chart so we can look at the most recent rally up off of lows. We'll do 15 so you can see the whole move up. Okay. We had a series of traditionals that broke out into extensions. On Monday this week, we held a original traditional to new highs extension long. Same anchor new high, traded a second time. We now have blown out of its targets and are holding a new extension long. We defended the 61.8 line of it today. We are considering ourselves in this long as we are filled at the 82s, which is a front run of the 103.77s. We have our stop at the 60s, right below the 61.8 line, and the market looks to be getting a reaction. It's important now that we take a look at the counter trend. Off of our most recent highs, there was a extension that was being traded. Traded once, twice, once, twice. The third time it failed. Do you see how it failed right here? Immediately after failure, the market pulled into a halfway back short, defended the short's 50% line, and it traded to target. The series down off that high traded once to target, twice, twice, three times, and failed out. The market then pulled into the full halfway back as it's hit its downside targets. So we have a measured move short, the next traditional actually, that could potentially be holding. We just broke one, and we are holding technically a series of measured move longs off the low. We'll see what happens with these, but the upside is the bid's actually there into the close. It's too early to say what they're going to do with it, but we know we have a downside buy area, and if you don't feel comfortable taking this home, you can get out right here at your entry. So the Aussie yen, similarly to the exact same as the Aussie dollar, traded a series of longs off its lows, and then went into extensions, traded once to target. Same anchor new high never traded. It traded a traditional after, and then it did a same anchor new high of that traditional. The off of our most recent lows, off of this week, and beginning off of last week, we traded a traditional, sloppy traditional, defended at 6218 to target. When targets were hit, we never traded same anchor new high. Or I'm sorry, the next in the series. We began holding traditionals, a series of traditionals that traded once to target, traded one to target, two to target, three to target, four to target, and then failed the next. When we failed that, after failing that last in the series of measured moves, up off of the 80.53 lows, the market gave a halfway back short right at the London Open. That trade went to target. The market then held the next traditional. You can barely see it here, but it was a front run, and has a target of the 81.27s. Off of, in this next traditional, we traded once, twice, and actually failed the third. We're anticipating a second test. And because we never traded the next in the series on the Aussie yen from the prior entry lows to to highs, the downside target of this current measured move it's in, which is this candle up right here, filled it, aligns with the 50% long. So I'm interested in the 8130s right now in the Aussie yen. I also pointed out how the Aussie yen looks like it has a very clear potential channel that aligns with this 50% long. With that being said, I'm interested in being a buyer next week. Not yet though, but definitely next week. My eyes are also on potentially an extension short holding here. So there's two levels of interest. I'm looking for some upside confirmation. I don't want to put the buy-in orders at 81.30 yet, but if we happen to gap down to 81.30s, I'm buying the open. I will buy that gap open. So just want to let everyone know that. And finally, the euro. Talk about one of the most difficult markets to trade. To me, I feel like it just wanted to get to its full halfway back long, which it's down at right now. It is just a few pips at it to trade that level one more time. Absolutely difficult market. The extension short broke. The market gave a full halfway back long. That got free. And then they defended the 61.8. Really did break, but defended the 61.8. And now we have extension shorts from lows to lows that are perfectly valid at the 121.90s. We see one of these go to target, and the next one breaks, you could be a buyer again. And for what would be a high probability trade to get long. You know, we can hop in on these shorts, but guys, we're getting to the point where we are so far down on the euro, and running into such a big support level. I personally don't trust it. I don't like, selling the lows in the euro. These are like low lows. So, all right, everybody. I hope you guys have a great night. I am going to take Aussie dollar home. I will, depending on what we see where the gap's going to open. I might potentially move the stop, adjust the stop just minorly, just so it's not stopped at the open. But I'm not really anticipating any gaps at this time, except for maybe an Aussie yen, a little gap down, 10 pip or 20 pips down. Sorry. And the most I see the S&P doing is either gapping back up to the 61s or down to the 55s. So there's no event risk this weekend, other than in the euro, where there's just one every weekend because of the euro market. But that's what we're doing. So hope everybody has a great weekend, and be back with you as price action develops.